Good afternoon and welcome to the Blue Line Metals Edge here for Tuesday, September 6th. I'm Phillip Streible, Chief Market Strategist at Blue Line Futures. If you're watching this on YouTube, be sure to like and subscribe. If you need additional information, go to bluelinefutures.com or send an email at info@bluelinefutures.com. Looking at the markets, when you get these periods where you have a holiday weekend, you've got lighter volume on Friday, Sunday night, you also get the lighter volume. You have a news-driven event like the OPEC meeting, you're going to get some volatility in the markets here. So looking at OPEC, first of all, they did cut production. And if you remember the last couple of weeks, I've been posting that OPEC watch tool that the CME puts out, and they've been saying that there's going to be a production increase. That is completely false. OPEC has been saying that they're concerned about demand, they're concerned that there's too much supply out there, and they need to cut production. So they cut it by 100,000 barrels. The problem that they're having, though, with the oil market right now is that specifically, and if you look at that action, we shot it up to about 89.70. That was on the December contract. That's where many of you are long on the December contract. If you look at some of the front months and everything else, what's going on is that Russia is exporting oil directly to Asia, directly to India, and what they're doing is they're going beyond that price cap. They're going around that. They're going around sanctions, and then China is basically flooding the market with oil. So that's the problem right now. I think that ultimately they'll weaponize oil, and we'll see this 92 back on up to about $95 oil. So I think we want to stay with it, have some stop losses like 84.25 in that range. And I kind of cover that in some of the report right here. Looking at economic data this week, we've got a ton of stuff coming out. And it's not only just this. It's, if you look, you've got all these Fed members. They're all speaking. So you can look and see that there'll probably be volatility events around any one of these FOMC members speaking. So you're going to want to keep an eye on that. The big thing that everyone is watching is right here. It's this September 13th CPI data. This will tell you whether or not inflation is leveling out, declining, or is it continuing to escalate. If it continues to escalate, you bet you're going to see a firmer dollar index. You'll see stronger interest rates. You'll see a mix on some of these different commodities out here. And, it's going to lead to more problems and more hawkish commentary. So looking at markets, I posted the probable range and the refreshed ones. Because of the increase in volatility, you're going to see a lot more of these updated here throughout the day. So I'll send one when we get back over to the desk here in a few minutes. Also, China, they still have their lockdown. And unfortunately, they had an earthquake as well within this lockdown region. I couldn't imagine anything worse than being locked down in your house and an earthquake hits. How terrible is that? So getting into a couple of these markets, breaking down crowding analysis, they're still liquidating some of this gold, some of this silver. They're coming down. If you look at silver, we pop back up. The thing about silver and what I want you guys to really look at is right here. This is from 1980. This is the gold-silver ratio. There's only been 3 times in the history where it's been this out of sync. And that's why when it comes to silver, what we've been doing is picking up a silver call spread. I did an entire write-up right here. We're pretty much picking up like an 18.5, 19 call spread. We've got an email that also could send out. If someone's interested in putting that in their account, let me know. I can do it for you. Or if you're looking at opening up an account, we can send you out the account documents, and then you can get something going right there. It's a calculated risk spread. Additionally, here, you look at copper. Market's still short on that. You are going to get that bounce back on any kind of, when you initially hear an earthquake, what tends to happen is copper futures rally on any kind of rebuild, or if it's in a mining type of area, you're going to get that rebuilding discussion as well. You can see that copper commitment of traders on it. It's not really going anywhere at the moment. They're kind of in a holding pattern. You look at platinum. Platinum's actually one of the best performing metals right now. Today, it's up pretty good. It's been up about $17 to $25. I tried searching some news out. I couldn't really find anything on it. I couldn't find platinum strikes. I couldn't find increased auto sales. So, I'm not sure what's going on with that market other than technical double bottom here, a small snapback in the market. Even it's shrugging off palladium. I mean, it could be this big short position that's on the market. The managed money is net short 9,000 contracts. They could be short covering, so you're going to get some violent bounces on there. We did update the cycle quads going into this September month, so you can check these out here. You can see how we're going to go back and forth. We're going to have these periods where everyone's going to panic buy on the reflation trade, on the Goldilocks trade, and then they're going to go into a panic sell with the deflation trade. So it's going to get volatile and it's going to get sketchy. You look at the technical setup on the NASDAQ, the system did trigger a sell, and you could see really the sell was this big breakdown candle right here. That was your alarming sound. That was also when you had DMI minus crossover plus. You got the ADX that strengthened a downward trend picking up steam, and you've got stochastics moving down in oversold territory. Those are all the key setups here to be short the market. Fed watch tool didn't really move. Actually came down just a touch. 66 to 34% on 75 basis points rate hike. I've discontinued covering that crude oil, the CME's OPEC watch tool, until it can provide, that it's valid. It's probably just working off of different option calculations, and that's how they're coming up with, whether or not they're going to do a production hike or decrease. So if there was large put buying coming into that meeting, that's when you're going to see it's going to price in that there's going to be a cut. So I don't know if that's a valid tool yet. They might have to rework it. I might have to send an email to them, let them know that we're slightly concerned with the results. So you got this strong support in oil. Oil did shoot up to about right here, and then we backed off. So as long as this support holds, I think we're good on the oil, playing it to the long side. Couple other things here. 2-year, 10-year spread, kind of bouncing through that 50-day moving average. Not really showing anything other, a little bit more on the flattening of the curve at the moment. And then getting into anything else, it's pretty much about it. Let's give quick takeaways here. So like I said, inflation leveling out. Oh, the number of people that have multiple jobs is concerning. So people need to get multiple jobs in order to be able to afford some of this inflationary pressures. That's been something interesting, and that's why the jobs data is super firm. Chinese lockdowns, crude oil softens on global growth. So not a lot out there. Nord Stream 1 halt is going to deepen that European recession. So continue to short European equities, especially things like the DAX. And if you have any questions, you want to check out any of these reports, you want to talk markets, it's going to be a shorter update, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.